Hello Market Club members everywhere. Adam Houston here, coming to you from the digital studios. Well, it's Friday, July 1st. The first half of the year is over with. It's been quite a year. But I want to focus on gold a little bit today because obviously that's being the big winner, up almost 10% in the month of June. And that's outstanding when you consider everything else, every other asset class is either lower or flat for the month. But here's the big picture. We're going back in gold. We're going all the way back to here, which is about 7 or 8 years ago, and you can see we had the big run up right here. This is the big, everyone got excited about gold, and that took quite some time, and then all of a sudden it didn't look as though it was going to go to 2,000. This, everybody was saying $2,000 on the upside. It just didn't happen, period. And that's what you be careful with big round numbers like that. And once we went through the pivot point right here, these lows, which is right here, you can see the market began to accelerate on the downside. Now, this is the thing I want to look at today. And we've talked about this before. We've talked about this all year, as a matter of fact. And that is the resistance, which comes in right around the 1,300 level, right here. You see that right there? Well, the market has broken above that level, and now it's set itself up to go considerably higher. Certainly if you look at the lows here and we take that from the highs, you've seen this before if you've watched the videos, we can project that up to somewhere up to these levels right here. And then if we put our Fibonacci tools on, it's easy to do. Click here once, click on the highs, drag it to the lows. You can see we're looking at 1477, which is a 50% retracement, 1579, which is a 61.8% retracement. I would expect this is where we're going to be heading, the 1579 level. The reason I say that is because potentially that's where the resistance was right here. This is back, gosh, several years ago. But if you project that forward, it's pretty much the same level, and the markets have a wonderful symmetry about them, and I think that's now going to become, this is support, it's going to become resistance. So I think this is where resistance will come in to the market right around the level here, 61.8%, which is 1580. We'll round that up to 1580. So it still has a considerable way to go, and I think this is going to happen in the second half of the year. I think lots of things are going to be happening in the markets, whether it's more people joining Great Britain and exiting the EU, or politics here in the US, or just the economy itself. So watch that very carefully. We're looking at the Dow, which is quite an extraordinary week. Earlier this week, you can see we had a massive rally. This is the Brexit drop right here, boom, all the way down, and suddenly a massive rally took place, and it's brought it back up to an area I should say, that the market has had problems with right around these levels here. We have a mixed picture on our trade triangles, and this is the one I want to go with, just the mixed picture. I really don't have a strong feeling either way at this point in time. I want to let the trade triangles tell me what they want to do, because right now it is very mixed. People are bearish, people are bullish, and I think it's reflected in our trade triangles. So the best thing to do is probably be on the sidelines. That's what the trade triangles are telling you. It's pretty much the same picture with the S&P 500. You have the two triangles in conflict with one another, saying you should not be in the market. It's a trading range, and quite frankly, this type of V action like this is extraordinary. You just don't see it to this velocity very often. I'm sure this is probably once in every 5-year type event, even 10-year events, but this is the Brexit straight down and the recovery straight up. So that's just incredibly difficult to, one, predict, and two, to trade in many ways. So stay with the trade triangles. They're neutral right now. Be on the sidelines. Now, this is one index that is not neutral. It's basically bearish, and that's the NASDAQ. And you can see both of our trade triangles are down. It's a minus 55, indicating the trend is like a trading range, but the odds favor being on the downside. A little bit over the RSI, but I don't get too excited about that for the moment. I would just give the market some time. But generally speaking, I think we may see this market roll back over to the downside. Now remember, I do have a stock for you I want to share with you that I think will go up 50% in the second half of the year. So just stay tuned with me on this. The last one I'm going to look at, crude oil, then we're going to look at that stock. So this is crude oil. You can see it's sort of really hasn't gone anywhere, sort of being boxed into this sort of like area, trading range. Really just nothing going on there. Kind of an interesting picture in crude oil because we use the weekly and the daily for trading purposes. And right now it's indicating a sideline position in crude oil. Okay, here's the stock we talked about. Well, I want to talk about today, I should say, and that's Barrick Gold. ABX is the symbol, and this stock is really performing incredibly well. It's up quite dramatically today. Barrick Gold's up probably about 3%, and it looks like it wants to go considerably higher. Now, when you look at this, you say, okay, it's come up. That's nice, Adam, but let's see where it's come from. Barrick Gold was trading at $55 a share, and boom, all the way down to maybe $7 a share, and now it's coming back up. One thing I want to look at is just a Fibonacci retracement, and this is what I'm talking about. Fibonacci retracement from the highs to the lows, and you can see a 61.8% retracement. It takes it up to $36, and even if you get a 50% retracement, you're still going to make about $8 on this share that's trading at $22. So I think it's a very, very good buy. For longer term, there may be some pullbacks. Don't mistake what I'm saying is just to jump in and buy it, but there may be some pullbacks in this market, but I think we're going to see this market trade up to the $30 level, over $30 in the second half of the year. Something to watch. Be careful. Again, but the trend is your friend. You've broken out of a nice base. This is a long-term base going back to the 2013. You can see all of that, almost a 3-year base, and I think that's augurs very well for this stock. Hey, this is Adam Hewison from MarketClub. Thanks so much for watching. Have a great 4th of July. If you have any questions or you want to improve your knowledge, leave them in the blog. We're only too happy to answer them for you. Have a great trading day, everyone, and a happy 4th of July weekend.